So really, when you think about climate change, it starts with knowledge around the dynamics, and then it really then comes to the topic around planning. Where do you build properties? What are the building codes that you use for properties? Are they appropriate for the environment that we're in? What do you do in the environment and the ecosystem around properties, towns, communities? What this comes with things like flood protections and so on. Even basic things like dredging rivers regularly.
Good morning, good evening, wherever you are. Matthew Grant here, and delighted that you've joined us again. And it's a lovely sunny day here in London. Summer has arrived, although I suspect it's not going to last very long. Well, if you work in the world of insurance, you will have heard of today's company that we are talking to, Swiss Re. It's one of the world's largest reinsurance organizations, and it's also been known for quite a long time for the research it does into losses, both man-made and natural disasters, and providing also information and data through its solution CatNet to its clients, and actually also now to other companies as well. Well, Robin is behind the microphone again today. He's talking to Russell Higginbotham. He is CEO of Swiss Re Solutions, and they're covering a whole range of topics, including the use of data for risk analysis, very much at the heart of how companies are underwriting. Also, what does climate change mean for insurance? Swiss Re has always been one of the leaders in that area, and thinking about strategies for how to build a resilient portfolio in these times of change. And then finally, how do you get the balance right between data accuracy and financial inclusivity? Well, we are delighted to have Swiss Re as one of our corporate members. And if you're interested in finding out more about how we can help you, if you're an insurer, how we can help you learn about what's going on in the world of technology and innovation, or if you're a company offering data and analytics to the world, well, why not come around, find out what we can do and how we can help you. www.instech.co is the place to go, and you can also find out about our coming events, including 4th of June. We are back in New York, thanks to Google, back in their offices, so please do come along and see us there as well for the afternoon. Well, that's it. Let's go back to Robin and Russell.
Welcome, everybody, to this week's Instech podcast. I've got reinsurance royalty with me today in the form of Russell Higginbotham. He's the CEO of Swiss Reinsurance Solutions. Russell, welcome.
Thanks, Robin. I've never been called reinsurance royalty before, but I'll take it.
I'm going on, I don't know whether this is flattery or not, but I'm going to call you a Swiss Re veteran in the sense that you spent most of your career there and you've done lots of different roles. Give us a quick précis of your career there.
Being called a veteran is, it's in the similar lines of being called royalty, I suppose. So one of my colleagues who recently left, who'd been with Swiss Re about 15 years, was called a veteran. So I guess this is my 30th year, I guess that qualifies me for super vet or something like that. It's been a fantastic journey, not over yet by any means. But yeah, I guess with Swiss Re, I've had the opportunity to work across most insurance markets in the world as part of one of the roles that I've had. But I've also had the opportunity to spend almost 12 years living in the APAC region, in Japan, in Singapore, and in Australia as well. So yeah, it's been a privilege, I would say.
After 30 years working in a Swiss company, would they give you a clock or something to mark long service?
I think the gold carriage clock or the watch is a thing of the past, I would say. So in Swiss Re, we have a long service incentive, which basically every 10 years you get an extra month's holiday in that year. So it just offers people the opportunity to take a mini sabbatical or take a little bit of time out and to do something a bit different.
Give people experiences, don't give them things. And now you're the global CEO of Reinsurance Solutions. Perhaps for the listeners, we ought to just say a little bit about that. What does the Reinsurance Solutions do? What services does it provide?
Yeah, so I guess in a nutshell, Swiss Re's Reinsurance Solutions business was launched almost exactly 2 years ago, just over. And it's basically where Swiss Re wants to, in corporate speak, monetize its IP. So, I guess over the 160 years that we've been doing business in every line around the world, in every market, more or less, we've kind of built up a bit of knowledge. And some of that knowledge is in our heads and in our people. Other knowledge is expressed through software platforms and tools. So basically what Swiss Re's Reinsurance Solutions business does is bring that knowledge and those tools across the insurance value chain for life and health and P&C. It brings them to our clients and to the wider insurance ecosystem.
Any particular areas of focus? What do you think the big issues are that your clients need help with in terms of the data and insights?
Yeah, so the reinsurance solutions business operates on the life and health side and the P&C side. So life and health, historically, a lot of the effort has been around the underwriting process, trying to make that more efficient, smooth, faster. And that now starts to evolve into the managing people's in-force, working around claims. So really across the insurance ecosystem on the life and health side. In P&C, obviously, P&C, there are many, many different lines of business in there. I think probably the one that stands out at the moment, and sort of probably Swiss Re's strongest point in terms of knowledge, is around property and understanding property risk and helping people understand their portfolios and looking to optimize those. And of course, it's a very dynamic situation when you think about property risk and the world as it is at the moment.
And then you can't talk about property these days without touching on climate and climate change, and that's implications for the insurance industry. Is that an issue of concern? Is that in your mandate there?
Absolutely. I mean, that's the dynamic situation I refer to. And climate change, beyond what we do in solutions, is clearly a massive topic in the world of insurance and the wider world of course, because it touches everyone in one way or another, whether you're in a territory that's particularly exposed to climate change, or even as a consumer in another place, you're still going to feel the impact because the price of the production of goods it goes up and so on. So it's a really, really big topic, and a topic that everyone's trying to get their arms around. In our solutions business, we provide analytical tools which essentially through API, you can upload your property exposures into those tools and then really understand where you have accumulation risks, concentration risks, and where the dynamics around climate change. So it's flooding in places it hasn't flooded before or for a very, very long time. It's burning in places where it hasn't burned before or for a very, very long time. So, the historical models that we rely upon in insurance traditionally, I wouldn't say they become irrelevant, but they become less relevant. So a lot of our work in solutions and embedded within our tools is around forward-looking models to help people understand the very dynamic situation around climate risk.
If you're running an insurer now, what should you be doing? There's some sense in which you need to plan, you need to mitigate, you need to manage. What would be your advice?
Well, I think for an insurer, and insurers are just part of the wider ecosystem, but maybe we can talk about that as a separate topic. I think insurers, you really need to understand the portfolio that you have on the books, and to understand its exposures, its carbon intensities. It's, like I said before, the concentration risks that you might have in climate exposed environments. And that starting point of understanding that in a very dynamic situation, that's where you start to understand what you have. And then what we would help people do is to say, if it's not quite where you want it to be, or you have certain exposures that you were unaware of, or concentrations that were a surprise, we help you navigate a path to get to a more balanced and appropriate book. A lot of what we do is around efficiency, but also a lot of what we do is around certainty. So actually helping people understand the reality and the certainty of their booking, and getting to a point where you have a more reliable performance from your book, or a performance in line with expectations. That's what we try to do, and I think anyone would say that that's pretty helpful in the current world.
You mentioned insurers there, and you mentioned a wider ecosystem. What does the whole ecosystem, what should it be doing?
Yeah, I mean, this is a key point, really, from my perspective, is that this is not just climate change is not just a question for insurers in isolation. Of course, insurers need to manage it, understand it. But I think as the impact of climate change increases, it's a topic for the whole of society, through governments, whether that's national governments to state to local, but also communities, education, families. So insurers fundamentally are there as a safety net. And insurance is there to help, whether it's an individual, a family, a business, to mitigate risks that they can't otherwise mitigate out. And so insurance is not there to cover everything, because if that's what your expectation is, then the cost of insurance is going to be very, very expensive, unaffordable. So really, when you think about climate change, it starts with knowledge around the dynamics, and then it really then comes to the topic around planning. Where do you build properties? What are the building codes that you use for properties? Are they appropriate for the environment that we're in? What do you do in the environments and the ecosystem around properties, towns, communities. What this comes with things like flood protections and so on. Even basic things like dredging rivers regularly. These are all things that mitigate risk, and I think it's the society's role to mitigate as much of that risk as they can through these sort of measures, and then insurance is there to pick up the residual risk as a safety net at the end. And I think if you have that ecosystem working in well together in a kind of harmony, if you like, that's a good news story for everyone, because insurance can be made available at a reasonable price, and society is fully aware of the topic around climate change and acts collectively to try and mitigate those risks.
I think that's right, but I think if society isn't aware of it, it would be now. I mean, in the sense that the issues you just discussed there, particularly the issue of affordability, is already manifesting itself. In some areas of the States where properties are prone to flood or wildfire, wind, they're already uninsurable if you use the existing insurance model. That's clearly a massive structural issue for insurers and for society. How do you see that playing out?
Yeah, well, I think all of this starts with knowledge or awareness of the risk, because I think without that, you have no basis for understanding. So if you have a raised awareness of these things, then you start to get into the mode of what are we going to do about that. So this sort of risk knowledge is the starting point. Attitude towards risk is also an important one, because if you can know that a risk exists, but if your attitude is sort of blasé or you think everything's going to be fine, then that's also, you're not going to tackle it. So I think those are the building blocks. Uninsurable is a big word, actually. So as risk increases, if society does nothing in response to increased risk, then the cost of insurance, or let's say more broadly, the cost of that risk to society goes up. So then people see the cost going up, and then it starts to become less affordable. So people either buy less or they choose to buy not at all. So that's the sort of the dynamic, right? So if prices go up and then people start dropping out of the insurance system, that's bad news for insurers, but it's also bad news for society, because that risk is still there, and that risk then falls onto the broader, this sort of economic loss rather than insured loss, falls back onto society. So people either have to take it onto their personal balance sheet, or people will then consider governments to be the insurer of last resort. It becomes a challenge for governments there, because that's not necessarily the function they're there to do. Getting ahead of these topics is the important thing. So you sometimes don't know that you're exposed to a risk until something bad happens, and then everyone clicks into gear. I think what we'd like to do from a Swiss Re perspective, and I'm sure the whole industry would feel like this, is get ahead of these topics so that people are aware of them in advance of them happening, before those catastrophes come. So the mitigation is there in advance.
No, I like that. But again, in the interests of being a provocateur, in an ideal world, what's happening is that we're getting better and better data. We're able to analyze each risk more granular fashion. We can price technically in a really accurate way. And if I go down that road, then aren't we going towards the sort of financial exclusion type issues where insurers will start to select the ones that they want to take, price out the really poor risks they don't want to take on? I mean, this has been sort of talked about for years. It's not quite in the headlights as it was 2 or 3 years ago, but is that a worry as we sort of get better and better at this, and you inform your clients better and better about the real risk?
Yeah, so I think there's two ways this can develop, and I think you raised probably the most important topic here. And I think it's really for the insurance industry to consider which path it wants to go down. So as you say, data is more and more available, so we're able to understand risks much better, much more accurately. So I guess the positive side of that is, if you have more understanding of the risk, you have more certainty around the risk. So you speak to your reserving actuaries and your chief financial officers. They want certainty because they can allocate less capital. If once you have uncertainty in there, you need to hold more capital against those risks, and which means ultimately the cost to the customer is more. So better data gives you better certainty, which means less capital, which means less cost, that's a good thing. Also, the availability of data helps us understand risks better, which the positive that I would push and would encourage everyone to think about is actually better data gives us a chance to make better design products, more accurate products that put good value insurance in the hands of more and more people and businesses. So that's what we should be aiming for. the sort of the dark side, as you mentioned, of this story is data gives you this higher degree of accuracy. So if that leads to you making insurance more cheaper, essentially for the best risks and more expensive for the not so good risks, that's not really what insurance is there to do. We're there to promote the pooling of risks. Maybe think about it like if you're in your town or your village or your city, and all the people that live there. There's a sort of a normal distribution curve around health. So the mass majority around the median, and then you have some people who are super healthy and some people who are very unhealthy. If by using data to segment that more, you start to give the super healthy people lower cost insurance, the average cost for the rest goes up and up and up the more you dig into that. And what that means for the less healthy risks is that the price goes up, and then ultimately they may not be able to afford or get insurance. That, I would say, is a really negative outcome for people, and it's really a negative outcome for the insurance sector as well, because what the regulator will do is look at this and say, this isn't what you're meant to be using data for. And if that's what you are going to use data for, I'm going to restrict your use and access of data, which then takes us back to a bygone era of insurance and reinsurance. So I think the message around data is to use it to improve certainty, but also use it to, I guess in inverted commas, you'd say do good, which means more insurance for more people, well-designed products, easy to access. That type of approach is the one we should be thinking about.
I'd make this observation, and I hope not too many of my past employees are listening, but every startup I've ever done, I've always given the employees medical health insurance. I'd like to pretend out of true altruism, but actually it was in order that they could part subsidize my unhealthy lifestyle, because if I bought for 20 people at the same time, my price went down considerably compared to what it would be if I bought it on my own. And that's because we were being priced as a company, as a collective, rather than me being priced on my own.
But that's fine, because it's still a win-win, isn't it? Because you get access to affordable cover, your employees get medical cover that they wouldn't have had otherwise, and then from I'm sure many successful businesses, you get people back to work as soon as possible because of that access to the cover. So I don't think that's not a bad thing, Robin. No need to feel embarrassed about that.
No, perhaps I was spending too much money on my employees, which is why it ran out so quickly. I'm just changing tack now, back to the immense amount of data and insight you have at Reinsurance Solutions. What kind of customers use you most? Is there a sort of profile?
Yeah. So, our core customer base is our Swiss Re's insurance customers. So the people that we're doing reinsurance with, that's the sort of starting point. And within that, there are different groups of companies. There are the big global players, there are the mid-sized players, and then there are some very small or specialist insurers. I think when you if you looked at what we do against that profile of insurers, you'd say probably your main customer base is going to be the small to mid-size, because they're the ones who don't have whether it's the money, the capacity, the IP, the management bandwidth to do a lot of these things themselves. And that's true. So we a lot of our customers are in that sector. Surprisingly, perhaps, is that around half of our business would come from the larger, more global players, which is not what I would have expected actually going into this. But there's definitely a question of build versus buy, and Swiss Re also thinks along those lines. Are we the best people to develop a certain asset, or actually is there a really professional asset out there available commercially in the market? So that becomes a topic as we grow our solutions business. We make our solutions available to essentially to anyone. So we see non-client insurers coming in, we see brokers actually buying our solutions now, we see corporates becoming actually quite a big customer base, governments as well. So when you think about the topic of risk more broadly, and keeping on that topic of property risk, there are many people who run with property risk, not just insurers, and understanding their exposures to climate change and to other elements is just as important to a fund manager, a property fund manager, as it is to an insurance company. So we've been actually really quite pleased and positively surprised at the breadth and depth of the people that are interested in the IP of Swiss Re.
You've mentioned this already, so I'm just going to refer back to it, but you must have a dilemma as to the things that you're already good at, areas where you need to expand into, areas where others do it really well and you might look to partner. How does that play out? Have you a clear strategy? build or buy? Anything you're prepared to share here?
Yeah, no, absolutely. Swiss Re historically is always in that build mode. If something that we need to do, we'll do it ourselves. We'll do it really, really well, and we'll end up with a good product. I think these days we ask ourselves, we look in the mirror and say, are we the best people to build this? Is it going to be as good? Is it going to be the same, lower cost or more expensive? Do we necessarily have the right IP? So we very much ask ourselves those questions. And I guess to give you a couple of examples, last December we bought a flood specialist company called Fathom, where our view was their knowledge around flood and the depth of experience and what they've developed in terms of, again, forward-looking products under different climate scenarios, trying to estimate flood impact. They have amazing products. Could we have developed those ourselves? Maybe yes, over time with enough money and enough investment, but actually in terms of getting there quickly and getting there with something that had a lot of certainty already, that was clearly a better path. We also, it's not just buying things, it's also around partnering. And I think how you partner with people is equally an important topic, because it's that 1 + 1 = 3 mentality. So again, another example, we have a partnership with Google X, which is the used to be called the moonshot factory of Google, and we have a partnership with them on wildfire or bushfire, depending on which part of the world you live in. And again, with Google's assets, they have produced an approach to wildfire modeling, which is very, very impressive and again forward-looking, which we felt is something that our customers are really, really interested in. And brands like Google and Fathom, they also bring a kind of a credibility as well. So it's not just a Swiss Re product, but it's Swiss Re trying to bring the best that's available in the market to our clients through a single point of access. That's ultimately what we're doing.
We're great fans of the Fathom people and their product. So that's one we're watching with interest, as a lot of people are. Are you able to share what your thinking is with Fathom and the same with perhaps other acquisitions that you might plan to make along the way?
With Fathom, we also think they're a great bunch of people, and we're really happy to have them now in the Swiss Re family. Fathom keeps their own brand, and they keep running their business out of Bristol, which is great to see, and we all enjoy visiting them quite regularly. What we're doing with Fathom is essentially bringing their IP and their flood mapping knowledge into some of our products like CatNet. So CatNet is probably our most well-known property product, sort of analyzing and understanding your portfolio, and now we bring in CatNet data, Google X data, some other companies as well. So it just becomes a much broader offering. So that's great for Fathom. What they like about Swiss Re is that we offer a stronger distribution than they would have by themselves. So through the brand name, through how we are positioned in all the markets around the world, we can access the insurers, the brokers, whoever, the MGAs, whoever it may be. And so there's a sort of an efficiency play there where we can get their product into the hands of more people more quickly. So that's what we do with Fathom. And actually, it's a two-way street, because Fathom, they have their own salespeople, and they are very able now to take the wider Swiss Re product suite out to their clients as well. So it works very, very well.
And are you looking for more Fathoms, as it were, outside of just flood?
Yeah, I think so. In terms of Swiss Re's strategy around solutions, we would imagine that we would grow organically, and we've been growing very well organically. We imagine that we would grow through partnerships, like I mentioned, bringing the best there is out there embedded within Swiss Re products, and we would continue to look to grow inorganically if there are the right opportunities that are out there that are complementary to our business. So I think that's one of the fun things about having the job that I do. There's plenty of opportunity out there, and it's really just a challenge to sort of orchestrate it in the right way at the right time at the right pace.
Your enthusiasm for insurance or reinsurance shines through even after 30 years. So it's great to see. There's far too many, and not that we have them on the Instep podcast, tired of life senior executives, but you're certainly not one of them. If you want to give one nugget to our audience as a parting shot, what would it be?
Well, if you'd allow me two nuggets, Robin. I think the first one would be, this is a sort of maybe a shameless Swiss Re one, is have a look at Swiss Re Solutions on our website, because it's the fact that Swiss Re is doing this fee-based business, promoting our IP and trying to help people is not as widely known as we'd want it to be. So if anyone's listening to this and didn't know we were doing this, please take a look or give me a call. I think then more broadly, I think it just comes back to that topic around data and doing good. Because I think as this data becomes more and more available, I would just encourage everyone to think about how can we as an insurance industry get more product, more cover, good value cover in well-designed products into the hands of more and more customers. There's a massive protection gap out there, and it gets bigger every year, which means if you take a negative view of that means that we're failing as an insurance industry. And so over time, there's a risk that we become less relevant. That should never be the case, because we should be there providing great value products to society and doing our bit to make society more resilient.
Wise words. Russell, it's been a pleasure. I don't feel like you're done yet. I feel there's life in the Swiss Re veteran dog yet, and I expect to see great things both from Swiss Re Solutions and from yourself in the coming years. Really, really enjoyed our chat. Thank you so much for joining me.
Thanks, Robin. There's definitely life in the old dog yet, and I have to say the great thing about working in the job that I do, in the sector that I do, there's always opportunity, there's always challenges, which just gives me more and more energy every day. So it's fantastic.
Yeah, the job will never be done. Thanks, Russell.
It's always really fascinating finding out what the insurers and reinsurers are doing. So very grateful to Swiss Re and Russell for that. As I mentioned, we are out in New York soon, and we're still doing a lot of events up until August to give you a month off then. And you can find out everything that we're up to www.instech.co, including how to become a member and what that means. Or if you want to contact any of us, you can contact Robin Merttens or myself, Matthew Grant, via LinkedIn, or any of us, hello@instech.co. That's it. We're done.